The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And I hope you are having a wonderful day out there. It is April 22nd. On this day in history, in 1945, Adolf Hitler had just learned that from one of his generals that basically they all ran away at the assault on Eberswald. Probably Eberswald. I took 3 years of high school German. You think I'd know more. Admits to all of his underground bunker that the war is lost and suicide is the only recourse. Kind of amazing that at the end, even he had to admit what everybody else had known for months. But arguably, probably the biggest day in world history of the last century. But imagine what everybody thought back on that day if they would have all known that for all practical purposes, defeat was inevitable and the war would be over in a few days. Anyway, we've got a lot to talk about today. I wanted to talk about some bubbles. I had some questions about bubbles in my emails. And there was another book that's out on this whole subject. It takes a little different take than most or some of the books out there. Normally, I recommend A Short History of Financial Euphoria from John Kenneth Galbraith. He's a big lefty, but for the most part, he got the history right without a lot of axe grinding. But this one, kind of an interesting history also of bubble, and it's called Devil Take the Hindmost, A History of Financial Speculation. Basically, it comes from a 16th century proverb where basically you better just run fast and hope there's people slower than you, and the devil will take, i.e. the hindmost, the people that are the slowest. And the idea is that for everybody in a bubble, they think that they will be the fastest runner when it does blow up. It's Edward Chancellor, for those listening and not watching on Tiger TV. But interesting book. I wanted to get into this just because some people are saying that there isn't a bubble. And I'm going to go through some of the things that at least he believes after a study of bubbles indicate that we are in one. Even though that Greenspan and everybody else always says that there's no way to know why you're in one. Those guys are either stupid or liars. I don't think they're stupid, so I'm going to call them liars. The bubbles have been enough, and if you're an economist, I think that probably, in the first 3 months, 6 months of studies in college, you'd probably at least talk about bubbles. But most of these guys are academic eggheads. They're not worried about losing their jobs, but pretty interesting idea. But innovation or insight forces people to rapidly debate the creation of a new economic value, i.e., in this time, the Fed's involved. So therefore, they debate the creation of a new economic value. And it creates basically an upside-downside imbalance to betting. Basically, a lot of people believe that if you bet, you can lose your 100%. But they always think in these kinds of bubble markets that they'll be the ones that make 1,000%, that they'll be in Netflix when it rises 300%. And I think that while you can make that kind of bet, you can normally do it within the context of no bubble. Most of the stocks that ran very well did so without a bubble. In the case of Apple, we've seen a bubble just at the last $300 of it. We're probably somewhere around some kind of fair value for the stock now. But there's always that last bit when everybody gets involved. And, of course, there's always something. There's never been a company like Apple, so therefore it's going to 1,000. Okay, leverage liquidity in every bubble is added. Does that sound like the Fed to you? There's some form of financial innovation that broadly increases both leverage and liquidity. So what are we talking about? 1% interest rates and huge amounts of it. So not only do we have a very, very cheap money, but a huge amount of it from our cousin, gentle Ben Bernanke. A belief that a bubble can take them out. The belief is that a bubble can make them even greedier to lever up their investment so they can cash out the most before the inevitable break. In fact, most people in a bubble will admit that they're in a bubble. They will just believe that they're along for the ride. It's the greater fool theory, also called survivor investing. It's a belief that is held by one who makes a questionable investment with the assumption that they will be able to sell it later to yet a greater fool. In other words, buying something not because you believe that it is worth the price, but rather because you believe that you will be able to sell it to someone else at an even higher price. My belief is if you want to do this, then you better be buying puts and calls in a bubble. Of course, the words that are the worst are, it's different this time. Repeat after me. It's not different this time. After all of recorded history, after every one of these bubbles, everybody said it's different this time. It's different this time because of the Fed. It's different this time because the dot-com revolution. It's this time. It's never been different. Now, if someone can come up and actually tell me where we had, after we went through it and we knew that it's a bubble, why it wasn't different that time. Every bubble's ended in the same exact way. Bubble psychology becomes the bubble because of overconfidence. Basically, everybody keeps on believing that they've made all this money, so therefore they're smart, and they're smarter than the rest of everybody else. There's confirmation bias. There's hindsight bias. Actually herd behavior, and anchoring. And anchoring is probably one of the worst ones, and that is, especially right now, we're seeing it in gold. If gold had been $1,000, would people at $1,800 say that it was way too expensive? If gold had been $1,000 and now it's $1,400, would they say that? But more likely, if $1,400 is stuck in your mind, when it gets to $1,000, you're going to just have to believe that gold's incredibly cheap now. It was $1,400 for 5 years, so now $1,000 has to be cheap. The belief that things don't change is one of the worst parts of anchoring, and it sticks a lot of people in that bubble psychology. They don't believe that even after the bubbles burst, it'll at least come back to fair market value. And that is not true. When you get everybody coming out of gold, it can go far below fair market value. You get that herd behavior, especially in things like gold. You have very narrow exits and very narrow entrances. You can really get something like that going. Of course, everybody always says they saw it and have hindsight bias, that they just knew it was going to happen. And there's some other things in this. There is a great article out by Sebastian Galli of Society Generale over the weekend. It says, why do bubbles accelerate when identified? The cost of not participating is too high as performance falls versus your peers or your benchmark. Timing the correction and its intensity is also much harder than participating. If you just keep going up and up and up, you may probably get 2 or 3 years of everybody giving you a nice big fat paycheck. The problem comes in the crashes like 2008, when everything just falls out. You have no ability to get out of the market, especially if you're a larger institutional trader. There's a bunch of behavioral biases that are at work. The mad dash from Bitcoins just a couple weeks ago, from 100 with multiple warnings to a high of 260, and then back down to where several of those Bitcoin brokers have actually gone out of business and closed down starting last Friday. I think there were a couple of them. Probably the rest of them fairly soon will be after them. It's probably the most recent example. But Hopium Squared, I think is the name of that article. Jean-Paul Rodrigue has a chart. And if you want this chart, I think everybody in investing ever should have this. This is the phases of a bubble. And if you trade long enough, in probably the next 5 or 10 years, I'll guarantee you're going to run into a bubble somewhere. If this is not a bubble, I don't know what is, but we'll say that I'm wrong on this one. Every single one of them has the same, I guess this guy went back to the 1600s, but all of them have pretty much the same kind of movement in the chart. That is, they take off, they have a first sell-off, there's a little bear trap, the media gets involved, there's lots of enthusiasm, there's a huge amounts of greed, everybody goes delusional. At the top of the market, everybody says, it's a new paradigm, it's different this time, it just can't be like it was before. The market starts to turn down, everybody denies it. I saw that on CNBC today, watched a little of it this morning. The denial, once the futures looked like they were pointing higher, the denial came in full and hot. We get a little bull trap, and we might actually say the bull trap was last week when we got down to, 1536 on the S&P. You get a little bit of the return to normal, and that's what we've got today. Everybody's back in that denial stage. Everything's fine. Caterpillar had bad earnings, and they went up anyway. And then we're probably going to get into what I suspect is the next few days of fear and capitulation, and then despair. And then we return to the mean, which is probably what the market was worth all over again, and we get to start this thing all over the time. Anyway, you can email me at path, P-A-T-H, at tfnn.com, and I'll be glad to email you this chart, but I suspect this guy's done a lot of work on the phases of a bubble, and if you had one chart out here, this one's probably going to save you when you start getting overly enthusiastic or overly despaired. Anyway, should have changed the title on this. Some people are saying that we've had yet another huge sign at the top, and that is the Barron's articles. Basically, every time Barron has a nice cover out saying the world is going to the moon, the Dow 13,000 in 2000, the Dow 14,000 call in 2008, 2009, and what did we have this weekend? A Dow 16,000 call. Almost always Barron's has been able to pick the highs. There's a chart that I have, and I looked for it. I could not find it this weekend, but it's Abby Joseph Cohen, and every time she showed up, there was at least a 10 to 15% retracement. I don't think everybody it became such a laughing stock on Wall Street, she doesn't show up much anymore. But she, for like 5 or 6, 7 years, I have got a chart that shows her showing up almost to the exact high, telling everybody how much farther the market's going up. I suspect her job was to go out and lie. Yeah, we'll never know. Got a lot more news going on here today. We've got a lot of charts to look at. You can always give me a call at 877-927-6648. Something's drowning in here. What's going on?
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we're playing a little bubbles back there, scrubbing bubbles out there in the background. I couldn't really tell what they are. I've got some cheap headphones on today. Just sounds like mud. But on Friday, if you missed it, after the close, we had bank failures number 6, 7, and 8 of the year. First Federal Bank of Kentucky, Heritage Bank of North Florida, Chipola Community Bank of Florida, actually BB&T, I think I brought it up, missed the Fed's stress test last Thursday. So we've got some banks that aren't as healthy as a lot of people think that all the banks are now. There is 781 institutions with assets of about $288 billion that are still in trouble on the Fed's worry wart list. 68 of the failures in Florida have cost the FDIC insurance fund $12.8 billion in the last 3 or 4 years. Google had a flash crash this morning. If you missed it, it would have taken all of less than 1 minute. Google traded from 802 down to 775 in 1 second, while the 9,000 shares, and then came straight back up. There are people out there still playing games, and I guess someone noticed in a nanosecond what the future of Google was for the next second, and within, 5 minutes it was back up to 795 and still around there. We're going to take a look at Google in a moment. They have got earnings. Sales vote tax a sales tax vote in Senate. Basically, cloture vote tonight at 5:30. You would want to be watching Amazon and eBay. If it passes, there will be a vote tomorrow. Cloture just means that they'll allow people to take it to the floor. Why a lot of people, especially Republicans, talk a good game about avoiding taxes. It's all about, if you're a politician, it's all about redistributing a wealth of people that work to people who don't. And, if you can push that money around, you're going to get money for your reelection. That's what it's all about. But backdoor sales tax on each share of stock is a likely buried in the subtext of these. A lot of people on Wall Street are really trying to get this not to pass for that reason alone. That would mean that just because you're buying things on the Internet, we're not paying a sales tax for buying shares of stock. And actually, some of these people want us to start paying sales tax on each share of stock. But it's actually pushed by Senator Mike Enzi from Republican for Wyoming. It's called the Marketplace Fairness Act, would grant all states the power to collect taxes from out-of-state vendors selling goods to the residents. Now, unfortunately, there's a horrible thing that happened in 1993, and that is the Supreme Court ruled on this. The federal government does not have the right to collect sales tax across state lines. That had been decided years and years ago by law. And basically, the Hitler Youth went around and put the heavy hand of God on the arms of companies like Amazon and eBay already, mostly Amazon. They figured if they could crack Amazon, that the rest of the companies would fall in line. The problem comes in companies that have 2, 3, 4, 10 people. There are 9,700 different tax jurisdictions in the United States. So if you're trying to actually get the sales tax from a particular jurisdiction, how do you do it? There's 9,700 of them. Are you going to send out 9,700 checks out next year if you want to sell, $10,000 worth of goods? If you're a private individual, would you have to collect that sales tax? Just because it's used doesn't mean it doesn't get sales tax in some states. This is a huge kettle of fish, and there isn't an easy answer in this bill, but it is going to be interesting just the same. But watch that tonight. Probably going to mean that we're going to have decent moves out of Amazon and eBay tomorrow. Cloture vote at 5:30. Actual vote tomorrow, probably before noon. And that's pretty much what's going on in the news out here. I think I've got a phone call. Do I have a phone call? Yes, we do. We have a thumb. So we'll be going to that in just a second. Wanted to get into some charts while we've got 45 seconds here, so don't have enough light. Jason, are you going to be able to hang through the break here for us?
Yes.
Okay. When he comes back, we're going to look at HA, which is Hawaiian Holdings. We'll talk a little bit about that. And I've got a lot of more stocks to go through. But Jason in Honolulu, we'll be right back with you. And I'll find out a little bit about this during the break. Thanks for holding. We'll be back in just a second.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tiny bubbles and wine make me happy, make me feel fine.
And Jason, are you still there?
Yeah,
Is that guy still singing that music over there?
I can hear it.
Is that guy still singing that music? Is Don Ho still alive?
It's probably. I think he passed away.
Okay.
He did have some surgery done in Asia, I think, but unfortunately he didn't make it.
Yeah. Okay.
But he lives on in Waikiki.
Yes, he does. And when I lived there, I think I told you that last time, until I was about 10 or almost 11 years old. Everybody, once they found they had a place to stay free, I got to see all my aunts and relatives. When we moved back over here, never saw them again. Everybody figured out that if they could get there, they had a wonderful place to stay for a couple of weeks in Hawaii. So we had to go to that Don Ho kind of stuff all the time when they showed up. People I had no idea who they were. Huh?
Yeah, as a host.
Yeah, as the host of it. Anyway, we're looking at Hawaiian Holdings, which is Hawaiian Airlines.
Yeah.
What are you thinking about doing with this?
Well, it hit support 3 times at about low 525 to 545, and it did it today again at 545. So I'm thinking of buying it and hold it for maybe 3 to 6 months.
Yeah.
I want to know. I did some studying and go back and look at my own holding on using your method of 50% is the trade of the stock is the market, and 25% is the stock, and 25% is the industry. So as far as the airline industry, when is the season for it?
I don't know. I pretty much had made a rule not to buy airlines. Every single one of them has ended up the exact same way. There's some great quotes out there about Buffett and him buying airlines. You can make it in a trade, but it's just been a horrible business for so long that unless it really proves itself for 10 years, I'm going to assume it's a horrible business still. The only ones that have done well here are actually oil companies that have airlines. They used to be airlines, and now they've bought their own refineries and their own wells. So the only reason that they're doing well is they bought their own supply of energy. So there tend to be more than that. What I dislike about this chart is that you've got it's never tested the first low, which is $5.16. It's come close. But to buy this, you want it to come back into this 516. You want that volume to be incredibly light. So I'm going to say 500,000 shares. So you want to get back into you want to get back in it. Not a bad looking chart. I dislike that it came down with a whole lot more volume on February 4th, so you knew that was going to get retested. It got retested on April 3rd, but both those volumes are still way in excess of the first major low, which was that October 22nd low. So that's the one I'm looking at, $5.16 on 820,000 shares. I'd like to see the volume all dry up around in there, and I think you're going to get it. I think we got a little bit more volume as this thing moved down, but it's probably going to go down and touch $5 for about 5 minutes. And if you're going to want to buy it, that's going to be it. I dislike the airline business, but I'd much rather be in something that would probably, I guess there's probably only so many airlines that fly in and out of Hawaii, and it's not like they're moving into Omaha to put a new hub in, right?
Well, they have actually monopoly pretty much within the inter-island.
Not a bad business to be in monopoly. But the stock is basically telling you, you had a wonderful sell signal up here at $7.30 when it came in. This is another good example of really good sell signals. That July 11th high came in with 1.3 million shares. You blow through that on January 7th with 470,000 shares. So, that's exactly what I'm looking at. And I want to see the exact same opposite on the bottom. I want to see some very light volume. You could even say that the May 22nd low of last year at 530,000 shares was that low. That's why I want to see a very, very light volume back in, and I want it to break that 516, even if it's just for a second.
Okay, so we should set a buy below that, and then. Well,
you want to see it go below it. And you want to see it close.
Watch the volume, I think.
Yeah, you want to watch the volume. You want to go below it on lighter volume and close back in the trading range. As soon as it closes back in the trading range, you pull the trigger, you put a stop right under it, and say if it closes below 480, would probably be my guess out there. If once it goes back into that trading range, but you're going to 80% chance you're going to see 522. I would imagine the next 30 days. And, because that volume did not really decrease and you got a lower low. So you're probably a good example of this thing coming back into that. You're probably, the way this chart's setting up, I suspect you only get 30 minutes of it or an hour maybe of this thing below $5, and it may even hit 490, and then you'd be in the thing. But you need the volume to be light. In fact, when it gets back down that way, you may have to put your order in at 490. To get hit and maybe just a little extra room. We'll say halfway through the trading day, you got no volume, and it's broke $5. I might put in an order for 490 and hope it just bounces back into the trading range.
Yeah, see the trade that we execute cannot put in like the condition volume less than.
Yeah, you can't really do that. So
you have to watch it, and
that's why I'm saying normally I'll watch like about midway through the trading day, 12:30 Eastern, and try to get in there at the end of the day and see what's happening sometimes. But not a bad not a bad chart. This is in a trading range. I think there are better stocks out there. But maybe you're better off to sit there and watch the airlines come in and out and see how many travelers are there. And if you keep seeing them, don't laugh about that. There's a business right up the street that I literally with about 15 minutes from here. I used to drive by the parking lot every day. It was in the heyday of the .com revolution. And I had a huge amount of money in the thing, and I drove by the parking lot and watched because it was all the development. And when cars started disappearing, I knew they were starting to fire people. And I got out of the stock way before it blew up. So the old parking lot indicator is not a bad way to look at stocks if you're close to the company. So if you go ahead.
We read the news. The reason why it dropped so much in February is because they announced a plan to expand to China.
Yeah.
But the plan is going to start in February 2014. So investor doesn't like that because you have to spend money to train people to speak Chinese, learn about their culture, and go to the airport, get all this supply thing in China set up. Just like what you tell last week in Intel. Intel is setting up all this factory that they're going to build customized chips. So investor doesn't like that, so he punished the stock by selling it. But now looks like it's slowly getting back. And then I remember one of your listeners was calling and he was shorting the stock and he wasn't too happy about it.
Yeah.
I think Intel is a good buy if it drops like.
Yeah, I want to get it at 19. It's one of those stocks I don't trade in and out of. I want to buy it. I want to hold it for 6 months or 9 months.
Yeah,
and I think you're going to get that $19 out of it, so you should be cool. Well, I want to thank you for the call, Jason. You can be just like Jason and give me a ring at 1-877-927-6648. That's 877-927-6648. We're going to get on to some other stocks here. We talked about Amazon and eBay. When we're looking at these things, Amazon's up here at a trading range. It's had basically 2 lower highs out of this thing, and the volume has decreased each time. And they've got earnings coming up, I think, on Thursday or Friday. I think Thursday night out here. Caterpillar did come out with earnings, had a nice little bounce out here. Way too many shorts. They were looking for the basically the bottom drop out. It didn't in these highly short stocks. It's already down $20 off the last major high, which is that February 1st high out here. And it had a nice little bounce, but they're still talking about the market pulling back rather strongly out here. You have a high volume low out here, and that high volume low is going to get retested. So I don't know how long it's going to take. You really want this thing, if you wanted to get a low, you want a low volume retrace of the July 12th low of last year at $78.25. Just a matter of time before it gets in that. And actually there's a longer gap that comes in here. And that gap actually was on, where's that gap on? 10 million shares. So, you had 14 million. That gap can get filled, and that goes down to $75. But we need, again, this is another one that volume is increasing as it's testing the previous July 12th low out here that had 8.7 million shares at $78.25. But I think you're probably going to get one day out of here, and it's going to shake down to $76. eBay, one of those companies that we talked about, is going to be all about whether the sales tax thing rolls through. If it does, it's going to severely hurt eBay's real business. The PayPal thing is a secondary issue, is coming under fire from Square. So you got a very interesting business setting up. Certainly looks like eBay is going to come down and test the March 18th low down here at $49.55, and we'll kind of see how this thing is doing. Let me get just a little bit better chart out here. The energy already on this way down is stronger than it was on the last leg up. I think you probably would have to say that you got an excellent chance of that March 18th low at $49.55 at 14 million shares, and then see what this thing does. What else do you need out here? Halliburton out with his earnings today. Here we go. And we've got a nice little pop in this thing. It had gotten below and got to 36.77 on a heavier volume. This, to me, is just a bounce in a downtrend, and I suspect we probably start that downtrend again tomorrow. I'm not putting a lot of weight behind the move today. This is kind of the options rollover part of the move. What do we have out here for a movement today? What are we up? 9 points on 2.2 billion shares. So not a lot of volume pushed to the upside. 10-point bounce. I suspect that we're back under the 15.55 on the close by tomorrow afternoon. This is probably options related. A lot of people trying to get a little bit more off the top on some of these stocks out here. ISRG also out with earnings and news. Trying to pop back up out here. But I suspect it's also got its high volume low from March 15th. When the news started coming out about the government trying to get out of buying these machines, which is really what the story's all about. They make $1.5 million machines. The government, Obamacare, doesn't want to be buying these things in the future, so they're coming up with a lot of who shot John about doctors doing bad operations with these machines. And doctors can do bad operations without the machines. Has nothing to do with it. Robotic surgery, actually fairly decent, especially I'm actually going to probably have it done here in the next 3 to 4 weeks, and I have my knee surgery done. It can be done a whole lot better than by the hand of a surgeon. There are no guarantees, and if you've got a drunk behind the wheel of it, probably not going to do very good. If you wanted to look at this down at 455.18, 2.5 million shares, that's where your next chance of maybe buying this thing, getting in. I think we've got a couple of people looking at it. Microsoft had a nice bounce out of here today. What is this bounce about? Somebody came and said that they bought a huge amount of this stock. They are pushing to get rid of Steve Ballmer, and at the same time, they've got a two-pronged approach. They're buying enough shares to get in there and start talking about busting Microsoft up into component parts and maybe making it worth a lot more than it has been. And I think what we saw over the last few days was some decent consolidation, but accumulation of the stock. And we still have a lot of people in big hands out here getting into these stocks. But that's the deal. Nothing's really changed in Microsoft other than by getting enough shares of it. This big hedge fund, it's a hedge fund? I think it's a hedge fund. Is going to get in and try to get enough shares, about $2 billion worth, to drive Ballmer out and to split the company apart. I think that they're probably happy with the money they've made already, and they may just go ahead and start selling into this market. But easy prey, because there were a lot of shorts in Microsoft out here expecting it to go lower. Netflix after the bell tonight. If this thing pops, and I suspect it will, it's going to be highly short. It's still Icon still has huge amounts of shares in this thing. I suspect that we see a little pop out of this tonight. They haven't, their books are phony because they don't tell you what they spent to get all that content. So they can basically sell you anything they want. Until they come through with those numbers, as far as I'm concerned, this is all a fraud. But I'd love to see this thing back up around $200 and run out of gas so I could pull the hook on this and short it. But maybe we'd be lucky to do that.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Got a question from the den, and that is, can the NDX become a multi-week rally leader? And I suspect that we have not seen the lows in technology. That is one reason why, is I have not seen any capitulation in a lot of these stocks. No fear, even though they're at lows. People buying Apple in front of the earnings tomorrow night. There just isn't enough people out there that have any fear. And I think that goes along with my bubble mentality out here. When we look at Intel, Intel is awful close to giving us a sell signal. What is it, about 7-8 cents short of its high that had 100 million shares on January 17th. We've got, about 40% of that so far today. So to me, this is just a little bit of blow off. I really want to see, and I think we're going to get it, and that is a couple of really bad weeks in this market. We're going to see these stocks all wash out, and we're going to get over the Bernanke bubble fairly quickly, I think. And once we're over that, then I think the market can actually start to repair itself and move higher. But we've got to discount the money that's going to be coming out shortly. Bernanke is not, I don't believe, has just been jawboning. I think he is truly starting to move about throttling his purchases every month. And I think he's already seeing that he's getting less and less for his money, unless you talk about a bubble in the stock market and bubbles in certain housing markets. So we continue to see that. Anyway, I don't see a whole lot in the market until I see capitulation. And certainly as bad as technology has been, it will be the first one. Apple, again, earnings tomorrow night. Maybe all the bad news is in. I think we'll know a lot more tomorrow about what this is doing. But to me, right now, I suspect that this is a bounce because of expiration. We're probably going to see the downside of the market tomorrow, and I suspect the market will continue to move down, and we'll probably have a close below 1555 tomorrow, and that'll be the next sell signal and the next leg down in the marketplace. Tesla having a little bounce today on a positive article. Another one of these stocks that has super high short interest rates on, not interest rate, short interest in the stock. And it's going up very, very light volume, up to $50 on this thing. They make no money. They don't lose any money, but how much would you pay for a company that makes no money? They've got one car and 24,000 sales a year. To get the bounce that they got last time, they bounced on 4-1 because of their earnings. But what you found out is that they added a lot of incentives and asked a lot of customers to buy their car to make sure that they got that in to the last quarter. I suspect that this quarter is not going to be any better, but probably just more of the same when it comes along. So keep an eye out on this one. This one could turn incredibly ugly. Now, electric cars have been around for 115 years, and there is yet to be the first successful electric car manufacturer out there. And by successful, I mean more than about 5 years. So they make a fine car. It's all about battery and battery technology. Probably the only interesting thing in that whole area and market is GM is talking about a new electric battery in their cars early next year that can charge in 20 minutes instead of the overnight. That may be very interesting. I don't know what kind of range it's going to have. They have not said. It's going to be about a $25,000 car. It's hard for me to think Tesla is going to be able to move downstream effectively against the major manufacturers out there. Anyway, we've got Netflix tonight. We'll see you tomorrow. Same bat channel, same bat time.